We continue to take a look at some names that are on the move here. Diane King Hall, host of Morning Movers, is with me looking at Sarepta Therapeutics and the trials that they've been doing. Not good news. The stock has also been at new lows now.
Yeah, I mean, the stock is sinking more than 40% on news of the company halting its gene therapy treatment, ELEVIDYS. It comes following a second issue with regard to its treatment. There's a second reported case of acute liver failure, which ultimately led to the death of a patient. Now, ELEVIDYS is the company's gene therapy treatment for patients with muscular dystrophy. Multiple analysts you have downgrading the stock on the news of this morning. Again, this is news of a second patient death linked to ELEVIDYS, this time from acute liver failure. The company now pausing shipments. It's also halting a clinical trial. The FDA is supporting this suspension. Safety concerns around gene therapies have been growing. Now, for Sarepta, more than 900 patients have been treated with ELEVIDYS, but again, this raises questions now about the therapy's risk factors here. Wall Street, of course, as I mentioned, reacting swiftly to the downside. You've got BMO Capital downgrading it, slashing its price target nearly in half to 70 from 120. You have Piper Sandler, H.C. Wainwright also reducing their outlook on it. This drug has been co-developed. Again, it's been aimed at treating muscular dystrophy, but again, the risk factor now calling into question this gene treatment. Jeffrey's noting that, while liver complications are a known risk, this is really obviously shaking investor confidence, and you see the stock reacting sharply to the downside, Nicole.
Yeah, a second death, down over 40%, as you noted. BMO, a quick downgrade. Oppenheimer now quickly looking at I was reading a note about Oppenheimer now reevaluating some of their numbers. Really, biotech, healthcare were supposed to be one area of real excitement and growth, even with AI in 2025, but this name certainly not filling that at all. I saw one sell rating from H.C. Wainwright there as well. Right. A final thought maybe on the group or big picture?
Yeah, again, as you mentioned, H.C. Wainwright downgrading Sarepta to a sell from neutral. They've got a $10 price target on it. So again, they see more downside from here. The stock is already down more than 40% today, approaching $20 a share. Again, this is tied to the risk profile now with regard to this gene therapy. So again, it sees more challenges to come.
Yeah. So an 8-year low there for that stock. Let's get to the next one here. I know you're also looking at Cisco today.
Yeah, look, Cisco is on the receiving end of an upgrade. Shares moving a little bit higher today, extending their outperformance when you can compare them to the S&P 500 year to date. That stock, if you include today's move, is approaching a 10% gain for the year. So again, strong performance for Cisco. You've got Deutsche Bank boosting its view. It's giving it a buy rating now, increasing its price target to $73 a share. They've got three main drivers that they see here. One, they're just expecting them to grow steadily over the next few years, thanks obviously in part to AI, just the rise of AI. They've been rolling out these new products for offices and campuses, so they see that as a tailwind for Cisco. And then they see them as just holding up well against competitors in the space of networking or cybersecurity. And keep in mind, more than half of Cisco's revenue comes from subscriptions, like software services. That just gives us some stability to its earnings. So again, the seen overall as a driver there. And it's cheaper. They see the valuation cheaper than others. And of course, they're also generating a lot of cash. So they see that as being the potential to boost dividends or share buybacks.
And Cisco really just brought optimism during its earnings. I mean, it sort of set that tone for will people love tech or won't they? And when the company reported its numbers and then had the gap up and has been creeping higher ever since and getting some upgrades, that really just shows optimism for a name that really used to set the tone. We look at today's
Yes.
like Cisco and Oracle, and we've been getting some good news from the oldies, but
Yeah,
goodies.
exactly. You know, the tried and true are having their resurgence, and it's not just Deutsche Bank increasing their view. Goldman Sachs also boosting their price target on Cisco. They've increased it to $67 a share. Obviously, keep in mind that's ahead of where we are today. So they saw some upside from where it closed on Friday, Nicole.
All right, up next, Roku getting a nice pop today on some news. Let's hear about this
They
one.
are, and this is, I mean, shares rallying more than 9% right now. And this is, you know, kind of one of those deals where you see maybe two are better than one. So Roku and Amazon ads partnering up in what they're calling a landmark deal around ad space. And they say this will give access to more than 80% of connected TV households. So the streaming giants pooling their addressable audience via Amazon's ad platform, creating essentially a way for marketers to buy ads, whether we're talking about Amazon Prime Video, Roku, other streaming service on there. This new ad kind of approach is set to roll out this year by the fourth quarter. Again, the ads will run across both of those platforms. Again, they did some early testing of this. Their trials showed that they had 40% more unique viewers without added cost. So it doesn't cost more to gain viewers by taking this advertising approach. The ad frequency, they also saw that decline. So the reason that's good is because that reduces viewer fatigue. People get tired of seeing the same ads and might click away or turn away. So they see overall triple the value for less spend, or comparable spend to previous approaches. So before, these were seen as rivals, at least when it came to this, when you think about streaming, right? Because Amazon has that option, Prime Video. Roku has that option, the way people, you know, utilize their service. So they're approaching this, as they say, as a way to, you know, address shared advertiser pain points. And then also, because the ad space is so fragmented now, you have some who are buying ads on, you know, say Netflix or other streamers buying ads in the traditional TV space. So it's a way to reduce, okay, these brands, certain brands have so much ad spend. They want to spend it this way. How can we make sure that we both get a piece of this? And so that's the approach today. Maybe two are better than one.
And it's been so great. I mean, you mentioned Netflix. Netflix is up 88% this year. Roku has been a clear winner over 1 year as well, up 45%. So streaming still very hot, and Roku with a great footprint on more than 80% of the CTV households. So good news there as well.
Yeah, and the street obviously, or investors really like this deal, given the share performance today. With today's performance, it now outperforms the S&P 500 with this move to the upside. But again, if you look at it on a one-year chart, as you mentioned, Nicole, up significantly before today. It's been an outperformer in the space. So the street really likes this. This was announced at Cannes Lions, which we know is that big advertising event that's hosted annually.
All right. Thank you, Diane Cannon Hall of Morning Movers. Thank you so much. Good look at 3 important names today.